All right, flip to Fortune Community. Let's get started here with the underwriting module. In this one specifically, we're going to talk about how to find property comparables or how to identify your comps. So, what are comps and why are they important? Property comparables, otherwise referred to as comps, they're recently sold properties. Sometimes you'll be analyzing pending listings as well, but predominantly recently sold properties that are similar in size, in location, in condition, and have similar features to the subject property that being the property that you are analyzing. They serve as a benchmark for determining the current market value of the real estate assets. So, the reasons why comps are important. Number one, pricing. So comps help investors like us understand the true market value of a property based on actual sale prices of similar homes. This prevents you from underpricing or overpricing the asset. So that is something that is one of the more critical pieces of this. You want to figure out what can you forecast your resale value to be, and that'll help you in determining what you can actually offer on the property. Loan appraisals as well. Lenders use comps to appraise a property's value when approving a mortgage. So you get under contract and they have finance. So when you go to sell it, you get under contract, they have financing, their lender comes in, their lender comes in with the appraisal. They do the full appraisal and they want to make sure that the value is aligned with what the other homes in the area are recently sold that are what are worth. If properties priced too high compared to the comps may result in a lower appraisal, and this could absolutely impact the financing. It's a negotiation tool. When you're buying or selling, comps can be used to support your asking price and negotiate down seller's price by using recent comps. So for example, if someone's trying to tell you that this home can be resold for $500,000, but you're only seeing $375, $400, you can say, hey, my comps are $375 to $400. Can you please send me your comps so maybe I missed something or I can better understand why you're saying that, because I'm not seeing it on my end. There's a risk mitigation factor, which is all true for the entire process here. For investors like yourself, comps help mitigate the risk by overpaying for properties, especially in fluctuating markets. It also gives you some idea of like market trend insights. By looking at comps, you can identify trends in neighborhood price changes, which can be critical and crucial when deciding on investment properties or setting up sales targets. This will be also done in the identify your primary location module. Insights and trends and understanding what you're looking to resell your homes for will all be covered in that section. So now in terms of how to identify comps, the first thing I'll say, you should get a minimum of 3 comps. So you want a minimum of 3 properties that meet this criteria listed below, so are very similar to the subject property. I also recommend removing any outliers. Outliers are properties that would otherwise they meet all the criteria of the comps. However, they may be sold for substantially higher than the rest. So if your general resale targets are you're showing 325 to 365 and you have a property on there that sold for 500,000, throw it out. Especially if it's one. If it's 2 or 3, okay, maybe it's worth diving deeper. But if you have majority of properties that are in similar condition in a certain range and you have one outlier, definitely throw it out. Now, what criteria should be factored in when figuring out if this property is a comp to the subject property? Number one is going to be location. Comps should be within a close geographical region, ideally half a mile to a mile. And you should avoid crossing major roads, highways, or drastically different neighborhoods. This is kind of where starting in your backyard can be a little bit more important, because to give you an idea, here in Connecticut, let's take Milford, for example, we can go out a mile and a half, and we know it's all pretty much the same. But in Cleveland, you go out a quarter of a mile, half a mile, things drastically change. So make sure that the second point, avoid crossing major roads, highways, things like that. That'll help you if you're not familiar with the market itself. Size. Homes with they need to be within similar square footage. They should be plus or minus 10 to 15%. So, 1,000 square foot, you should be like searching homes that are 10 to 15% below. So call it like 850 to like 1150, 1200. It should be right in that range. Lot size. Try and match the lot size and avoid over or underestimating its value. This is critical. People love their yards, especially here in the Northeast. So you want to make sure you're comparing apples to apples. You don't want to compare a property that has 4 acres to a property that's sitting on zero point 0.4 acres. While the other information, while maybe it might meet all the other criteria, this is something that is important. So we'd much rather be kind of comparing apples to apples in terms of lot size. Also, the style, the architectural style of the home and the age of the home. You want to compare homes with similar architectural styles that were built around the same time. We like to be within 25 to 30 years of one another. So if the subject property is built in 1950, we want to stay within 1975 to 1980 on the high end that way. In terms of architectural styles, there are most common styles that you're going to be seeing. Just run through a few of them: ranches, colonials, capes, split level, raised ranches, bungalow, cottage. You want to make sure that your comps are all what the subject property is. So if the subject property is a ranch, try and get those 3 comps. Make sure those 3 comps are also ranches. Number of bedrooms and bathrooms as well. Homes with the same number of bedrooms and bathrooms, or very similar configurations. Try and keep comps within the same bed to bath ratio. If you are using comps with an additional bed or bath, ensure that you plan to add that into your scope of work. So if you're dealing with if you have a 3-bed, 1-bath home, try and find homes that are no more than 3 bedroom, and try and find homes that offer no more than 1 full bathroom. If you're using a comp that has an extra bedroom or an extra bathroom, it's not an apples to apples comparison, and you may need to include adding a half bath or a full bath to align with the comps within your scope of work. And then also the condition, the condition of these comps. Look for properties in similar condition to what your final rehab is going to look like. So if you're planning on doing a full renovation, compare against homes that were recently renovated. Now, another way to think about this is your scope of work will be figured out once you identify what these comps. So, if all the comps have updated bathroom, updated kitchen, then that's something you do. If these comps are kind of more in a classic condition, they're just like well kept up, then you may not need to put in that work, may not need to put in that money, because you're only forecasting to meet what they sold for. So you don't want to overdo the rehab and thus decrease your profitability margin. All right, so some more information on comps and comp criteria. So one thing that's also helpful while you're going to predominantly use your sold listings, it's not a bad idea to look at the active listings and the pending listings. So active listings show you your competition, what your competition will be once you list the property. These homes may not reflect the true market value, because they haven't sold yet, but they'll give you an idea of the trends of pricing, or people are listing their homes at within that same configuration of the subject property. So, 1,000 square foot ranch, you can get an idea of kind of what they're listed for at the moment. Also, pending listings, these are homes under contract. They indicate that buyers are currently willing to pay, although you don't know what the final sales price is. So you can look at, pending listings. You can see this home was listed for, $299, and it went under contract, days on market, went under contract in 2 or 3 days. Okay, that's a good sign versus, properties that were listed for $299 and they might be under contract, but maybe they're on the market for 120 days. That might, that's not the best sign in the world. So you may want to keep that in mind and use this information to help provide maybe more of a conservative underwrite of what you're forecasting resale to be. Then once you collect the information, so, you have comps that are within the square footage, things like that, you still want to adjust for any differences. So after identifying comps, make adjustments based on the differences between the comps and your subject property. Now, I had mentioned this a couple times, this underwriting spreadsheet that we're going to provide to you, it's going to automatically do that for you. All you're going to do, your job is to identify the comps. You'll enter in the comps and it'll output what the sheet believes the subject ARV will resell for. Now, some of the common adjustments include the square footage. Make adjustments for larger, so if comps have more square footage than the subject property, or smaller. the condition and the upgrades. If the comp has a newer kitchen, higher end finishes or upgrades, and you don't plan on doing that, adjust accordingly. Lot size and location, adjust for differences in lot size and location, corner lot, proximity to schools and highways, or in the neighborhood desirability. And other features, pools, garages, basements, extra beds, bath, these are things that will also need to be factored in. Pools are tough. Garages, we use more fixed numbers. So if we have a attached garage and the subject property is a paved driveway, there's an automatic adjustment that the sheet will account for. All right, so here is an actual example, and I've taken a screenshot from the underwriting spreadsheet that we'll be distributing to you all. Your version will be a little more fluid. This is kind of like a static version of it. So essentially what we've done is on the top line, that's our subject property. And then each of the line below will be our comps. As you see, number one, we have a minimum of three comps, which is checked there. You'll notice the subject property is 1,052 square feet. It's about 0.14 acres, a lot's amount of land available there. It's a ranch, a 3-1. It's got an attached garage built in 49. And then there's some other information on the right. And the other information on the right is going to help you more for your rehab scope of works. We're not going to get into that at the moment. Now you'll look at below. You got 3 comps, all within a half mile, all sold within the last year. All within that 10 to 15% of our overall square footage. And also in terms of lot size, we're pretty much in the same ballpark, at 0.12, 0.22, 0.2, and we're at 0.14. They're all ranches, they're all 3-1s, and they're all built, we're 49, they're 50, 54, 57. So within that 25-year range. So check. Now, obviously, this is a really good comp. This property has plenty of really good comps. We understand it's not always as clean, but don't worry about that because the sheet will make the automatic adjustments. So, if there's the subject properties or the comps are a little larger in square footage, the outputted ARV will adjust accordingly. So you don't worry about that. What you have to worry about is identifying the comps. Whatever you input into this sheet, it's going to directly output per those comps what the resale value will be. So this is a little bit, kind of a snapshot on the sheet itself. Now, I also wanted to kind of show some pictures of each of these comps. So our subject property is on the left. So you see, on the left-hand side, you have, pretty worn out kitchen. And then on the right, you have all 3 of our comps. You notice that the first one on the top, it's updated. You see LVP flooring. You do notice that the cabinets aren't up to date. They're not your normal shaker style. I'd imagine they're not soft close, but the property's in shape enough where we can at least use it as a comp. Then the 2 on the bottom, you notice these are more renovated. These are comps that have renovated kitchens. So you already know that our kitchen, just per looking at the comps, a part of the scope of work is going to be to update the kitchen. Because obviously condition, look for properties in similar condition to your final rehab, as I had mentioned. So, looking at these comps, it's like, okay, we understand that if we're going to use these as comps, we have to update our kitchen. Now, in the next section, we're going to discuss how you go about figuring out how to come up with your scope of work and how to estimate your rehab costs. But at this point, this should be all you need to know in terms of how you develop a comp set for your subject property. See you then.